Good afternoon, Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Thursday, July 14th, 2011. Grain markets were lower overnight with the European markets open and trading on the U.S. market. Falling back a little bit off of some early strength in the grains this week due firstly in part to the USDA numbers that came out friendly for corn on Tuesday morning. And then yesterday, the dollar failing off of Bernanke's what would you say? It was interpreted that there would possibly be a QE3 coming on up here down the road, not too far away, and then of course that caused the dollar to pull back and commodities strengthened up. We saw gold make new highs, all-time highs yesterday. This morning, Bernanke was in front of Capitol Hill again and said that we're not prepared to do any QE3 type of program. The dollar firmed up. It did not get much higher on the day than unchanged, but it did come off of its lows. Crude started to break off of an inventory report this morning, and we saw the grains pull back a little bit, probably due to profit taking from the longs over the last couple of days. And going into the weekend here, we may see additional profit taking, or we may see the bulls get excited about this warm weather that's expected for the next 5 to 10 days across the Corn Belt. So how did we finish up today? Well, July contracts expired at noon today, so the July futures contracts are done for 2011 now. September is now your front month Sep corn, up 4 cents at 6.90 3/4. You got the July corn went off at 7.18 today, so there's your target on old crop corn, 7.18. New crop was down 1 1/4 at settlement at 6.78 1/2, off of its lows by about 13 cents, if I remember correctly. We got down to about 64.65 in that Dees corn. So it was a strong finish, even though we were lower. And again, for those who aren't going to be trading tomorrow on Friday, starting the weekend early, they probably would want to be long ahead of this weather. You got soybeans. August contract up 7 1/4 today. 13.82 is where they settled up. New crop beans up 4 1/4 at 13.84, and then you got September wheat today down 7 1/2 at 7.07. So again, the July contracts are done. We will not be trading them anymore. They expired today. September is your front month on the corn and the wheat, and you also have August now front month in the beans. The dollar right now is at 75.48, down about 7 points on the day. Crude oil down 2.39 right now at 95.68. Over to the livestock markets. Saw some pressure come into what is typically, or what has been typically, a strong hog market off of Chinese interest in importing pork from the U.S. We haven't heard any recent buys from them, so we saw a little bit of a pullback today. 98.15 on the August contract. That's down $1.12 1/2. We also got word that up north today we saw the dressed basis cattle trading $7 lower week over week. And that provided lots of pressure in the cattle market today. Feeders down 297 1/2 at settlement, 136.92 1/2. And the fat cattle down 285 at 110.55. So keep your eye on the technicals there on the cattle market. It's going to be a very exciting ride, either down or up, whichever direction they decide to push this market. But the technicals are very definitive. We got some gaps here in the feeder contract that if we take out some more support, we'll go looking at some gaps that we made on the way up. And fat cattle, that's going to be an exciting market for the rest of the year. So if you have questions or would like some recommendations on how you should be marketing your cattle or using the markets right now as an investment tool, feel free to give us a call. Phone number here is 800-262-7538, or you can visit us on the web, www.allendale-inc.com. My name again is Bob Dalton, and thank you very much for tuning in today. We'll talk to you again soon.